Looking at the numbers, one of the first things I look at is the top line, the revenue, and then the profitability. The profitability, you did so much better than anybody expected, you actually almost put a shame to analysts. At the same time, it wasn't because of increased revenue. So my real question is, how did you do that? How did you get so much more money in profit out of relatively flat revenue?
Well, I think it's a number of issues. First, strong demand for our full-size trucks and SUVs. I mean, the Chevrolet Silverado, the GMC Sierra, the Escalade, the Tahoe, et cetera. There is exceptionally strong demand for those products. And so I think that's what's driving a very high average transaction prices. Because the demand is so high, we've been able to continue to be very disciplined on incentives. And then our financing unit, GM Financial, has done an excellent job of taking advantage of higher used car prices and just a very strong market. We're also seeing recovery and return to strong sales in China. So across the board, they contributed to the strong numbers.
So you surprised perhaps some people by saying not only will we stick with our guidance going forward for the rest of the year, but if anything, we think it's going to be toward the upper end of that guidance. At the same time, you have the problem with chips. We talked about it last quarter, something like $1.5 to $2 billion being left on the table, as it were. I think that number still holds good. And yet you're doing much better than some people across the street at Ford, for that matter, Fiat, Chrysler, Peugeot. Why?
Well, again, there's not a lot of transparency between the different automakers of what's happening. We're focused on GM, and I think what's been incredible is the work that we're doing with our purchasing group, our engineering group, our manufacturing group, and sales and marketing, and working with suppliers. You know, we've been working to build strong relationship with our suppliers for many, many years now, and there's just a team that is looking, understanding what chips are we going to have access to, how do we allocate those to our highest demand and products that we have limited or no ability to recover because there's just such strong demand. We run those manufacturing operations around the clock, and they're just being creative and doing what engineers do of problem solving and in some cases re-engineering to get the chips to the right products and to just find every opportunity we can to build a car, truck, or crossover and get it to the customer.
So it's a mixed question, not just of the vehicles you sell, but also where you direct your chips, it sounds like. You want to direct it to the ones that really are the most important. Are you getting more chips, do you think, than you would have expected because of your purchasing department?
Well, again, there's not a lot of transparency to say more than. We were very clear last year of what we thought the demand was going to be this year and the chips that we had ordered. And so, we're continuing to work with the supply base on that. And again, but I think it's looking for every opportunity and managing it centrally and also working hand in hand with our JV in China. So across the board, we are just really being, I think the team is being really scrappy and finding ways that we can build the vehicles, not only full-size trucks and SUVs, but also our electric vehicle programs. And I think it's important to note that even with the challenges of the semiconductor shortage, there is no impact on our electric vehicles, on our autonomous vehicles, and the growth initiatives that we've been talking about this first quarter.
That was one of the questions I had, both for the Hummer that's coming out later this year and then the Lyriq, which is coming out or sometime the first half of next year. Is there going to be any delay because of the chip problem?
Absolutely not. And I can tell you those vehicle programs are on track, and I'm really excited to have customers get in those vehicles and drive them because I think they're going to be amazed.
We understand the $1.5 to $2 billion number that was put up before, but can you give us some sense, those of us who don't understand the supply chain, if you had 100% of the chips you needed, what percentage are you getting now? Are you running at 50%, 75%?
It's a very dynamic situation. And so, again, I think it's every chip we have access to, we're making sure it gets into the vehicles where we have really strong customer demand. But it's something that changes every day, David, so I'm not going to put a number on it.
This problem isn't going away in the sense that as you go forward, you're going to make more and more cars. They're going to require more and more chips. What is the longer-term solution to this so we don't have the sort of problem you have this year?
Well, I think we are going to see recovery. We think Q2 will be the weakest for the year. We'll see some recovery in Q3, Q4. And we're working on a lot of long-term strategies. I don't have anything to share right now, but there's a whole menu of things that we're working on, processes that we're changing. So more to come later in the year of how we'll make sure we're never in this situation again. But believe me, we have a dedicated team working on that as well.
When it comes to batteries, you've sort of vertically integrated integrated, as it were, where the joint venture where you're making your own batteries. Is there something like that, perhaps, that would make sense for GM?
You know, I'm not going to take anything off the table. We're going to look at what we can do to make sure that we have the right number of automotive-grade chips and that it doesn't constrain our growth, because we see huge opportunity not only with the product portfolio we have today, but with the strong electric vehicle products that we have coming.
We hear some in Washington, both the Commerce Secretary and also I talked to one of your Michigan representatives yesterday, Haley Stevens, who suggested perhaps there needs to be some co-investment from the government as well as the private sector in chip production. Does that make sense from your point of view?
I think making sure we have a secure supply chain for the growth that I think we're going to see, I think it's something that we all have to work together on, and we're having regular conversations with the administration and members of Congress to find the right solution, and we'll continue to do that.
In your presentation today, General Motors really lays out a fairly robust program to really go to electric vehicles and to really deal with greenhouse gases over the longer term. You have very specific targets you're setting out there. How do you hope to achieve those?
Well, I think it's making sure there's a whole ecosystem that when a customer looks at, can I buy an electric vehicle, they say, I'm going to have a better experience when I buy an electric vehicle. It's going to be a beautiful vehicle. It's going to be in the segment that I want to purchase, because we can't, you know, a person, if they want an SUV or a crossover, they're not going to buy a sedan. It's got to meet them in the market where they want. But then it's also making sure there's a robust charging infrastructure, and we're working on that as well. And that will be not only what we're doing, for instance, we're putting charging in our workplaces, but also working with communities and then working with all the startups that are in this business, connecting those. We just made an announcement that we're going to provide access to 60,000 chargers across the country to really give confidence to customers as they buy an EV, and even if it's their only vehicle, that they're going to have a robust charging infrastructure. And I think all those things combined, you know, beautiful vehicles, meets their needs, the right range, and then charging available, customers are going to move to EVs.
And importantly, I think for many investors, people who watch your company, I saw in your presentation, you expect to have the same profit margins on EVs as you have on the so-called ICE, internal combustion engine vehicles.
So as we move into the Ultium platform and continue to take cost out of the battery, that is our goal, to get there and have that break even and then move beyond. But you also have to understand there's a different cost of ownership in an electric vehicle versus an internal combustion engine vehicle, from gas savings that you don't have to fuel up. So we've got to look at the whole equation, but we're on that journey, and I'm very pleased with the work that's going on with our battery technology to continue to take cost out and increase energy density.
I'm sure you're looking at supply chains that go beyond just microchips at this point. As you move into EVs, where are there possible weak spots going forward, and what are you doing to address those in terms of what you need, the supplies you need in order to manufacture the vast number of electric vehicles you're anticipating?
Well, you know, as we look at some of the key materials that need to go into vehicles, especially those that are quite expensive, we're looking at how do we reduce the need, in each vehicle, but then also working with trusted partners in the supply chain to make sure that we have a secure supply, and that's going to allow us to grow. And so that's the work that a lot of it's done and a lot of it's underway right now.
So, Mary, as you look forward to 2021, as I say, you've said you're maintaining your guidance. If anything, you'll be at the upper end. What are the vulnerabilities? What's the sensitivity on it that might actually have you fall short?
Well, with the insights that we have right now, we believe that guidance is correct with where we think we're going to be from a semiconductor perspective. But I think, one of the things that gives us a lot of confidence is just the interest in our vehicles, the demand for our vehicles across the board. Whether it's a Chevy Trailblazer or a Silverado or an Escalade, across our portfolio, actually very strong midsize crossovers as well. So the strength of our product line, the services that we're providing, we continue to see growth with OnStar. So there's a lot of moving pieces that give me a lot of confidence in our ability to hit that, what we've said from a guidance perspective, and we're going to work it every day.
And finally, Mary, do you have visibility into the demand for your electric vehicles? I think the Lyriq, the new electric SUV, you can order as of September. Do you have any sense whether people want the electric vehicles as opposed to your current vehicles?
Well, we've seen, we can see growing, growing demand for the Bolt EV. Can't wait to get the EUV, the Bolt EUV into the hands of customers. We've sold out the Hummer EV truck and had extremely strong demand over quite some time for the Hummer EV SUV. So when we start selling the Lyric, which is one of the highest customer feedback vehicles we've had, of just the beauty of that vehicle, when they actually get in to see it, I expect we're going to have a strong reaction in September as well. So I'm very committed to the strength of our EVs.